Welcome to Chapter 25, and this week we're going to be talking about departmental accounting. I am going to break this video up into smaller chunks probably, but the learning objectives are not evenly, there's more material in some than others, so I think rather than deciding that now, I will just start these videos and we'll see where it takes us. So why do we care about departmental accounting? I tend to use this in my own law practice. In fact, I tend to rely on it in my own law practices for planning purposes, and your book talks about planning, control, and performance evaluation. I have less of a control issue, well, lots of control issues, but anyway, for me, it's generally a planning and performance evaluation purpose. And what we do when we're looking at departmental accounting is it allows us to look at segments of our business that may be more or less profitable than others, or how the, I guess, the drain on resources of some portions of our business. The reports that we will do for departmental accounting are not going to be part of our public financial statements. These will be strictly for our internal managers to use. And so when we do departmental reports, we're going to differentiate our cost centers from our profit centers. Our cost centers are things, our administrative types of departments, maintenance, things like that. Our profit centers are what actually bring revenue into our company. So we're going to compute the departmental gross margin. And so if you remember back from when we were looking at income statements, the difference between net sales and cost of goods sold is our gross margin. And so when we're going to make that computation, we're looking at our sales, our returns and allowances, discounts, our inventory purchases, freight in, and there's two ways that we're going to look at doing this, and I have a very strong bias toward one, and I won't be shy about that. So your book talks about keeping a separate general ledger account by department for each element, or maintaining one single general ledger account for each of the elements, and then at the end of the period breaking that out into each of its separate departments. I very strongly favor the first way. I don't like to ever record anything that I feel like I'm going to go back and change later unless GAAP accounting requires me to do it that way. I prefer to enter things once and charge them to the correct place at the right, as the transaction's being entered, rather than to just lump everything in there and figure it out later. So we've got Annie's Sporting Goods, the income statement for the year ending December 31st. And this looks kind of similar to how my income statement would look. When I do my income statement, I break down, I'm a, chief cook and bottle washer. I don't have departments, but I do have sources of revenue that would really be looked at in a departmental fashion, the way that they've done here. For example, I have Vermont cases and I have New Hampshire cases. And for me, it's been very important to look at where the bulk of my business is coming from, where my expenses are, because overall I may be doing fine, and then all of a sudden I'll look and go, wow, for some reason my Vermont cases have gone up, but my New Hampshire cases have gone down. And unless I break that down and look at it in that way, I might not notice that I need to maybe do some more work on my New Hampshire marketing efforts. Similarly, I break down my income by types of case. I do criminal defense, bankruptcy, and taxation. So when a client comes in and pays me, it is assigned. And within bankruptcy, I'll even break it down into the type of bankruptcy. And with criminal, I will break it down into, I basically have two main categories of criminal that I will allocate costs to. DUI, and then basically everything else that's criminal. If I were to try and break it down because I either get a smattering of, well, basically it's a smattering of other things, and to try and break it down by drug case, assault, things like that, it would start to get a little tedious given that it's just me. But the DUIs tend to be a larger source of my criminal work, and so it's worth keeping track of those costs separately as well as the revenue from those. And so again, I always prefer to do this on a running basis, so at any point I can pull up my income statement even in the middle of the period and just get a snapshot view of where the numbers are going. And so, and we'll allocate percentages to those, and I think you'll see that it becomes very useful because I don't look so much at the dollar as I do at the percentage. And so, as they talked about on the previous slide, we're going to be looking at net sales, cost of goods sold, and gross profit as they're reported separately here. And so gross profit divided by net sales is what's going to give us our gross profit percentages. And so it's really the percentages that I find particularly useful when I'm looking at these statements myself, because again, the dollars tend to be relative, but to suddenly see the percentages completely skewed, to me becomes a more important planning issue. And so what we're doing here is we're taking our gross profit and dividing that by our net sales to get the gross profit percentages for each of our two product lines here, golf and tennis. And so as you can see, golf is earning a much bigger profit. But the thing that you don't want to assume is that just because the gross profit is bigger, it means that it is generating a greater overall profit. And so we've got to also look at how the expenses are being spent by each of these two areas, because something that is bringing in huge revenue might also have huge costs associated with it. So we really need to look at what our costs are, and I look at very regularly costs associated with my various vendors that I'm using, for example, to try and increase my margins as much as possible by decreasing expenses as well as increasing revenue. And so I'm actually going to stop here because this next learning objective is fairly lengthy, and so we will go into the computations in the next video.